Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4 hour charts. So we kind of have to zoom out a bit to really see what is going on with Bitcoin's current price action. As we can see, we've had a bit of a distributive top here, where we established a new trading range above our old trading range, hit a high a couple of times, but as we can see in hindsight, that was obviously being distributed into. We have now found ourselves basically we broke back below this newly established range that we'd been in for a while, and then as soon as we did that, obviously all hell broke loose, and we broke back into obviously the old range and literally tagged the absolute bottom of our old range. So we have at present subsequently had a very substantial bounce from obviously the low of that wick. If you want to look at how far we bounced to where we currently are now, that this is not far off 20%, about 18% we've bounced. But what we just kind of have to realize now is that we're back in the zone. So the best case for Bitcoin at the moment, the best case is that firstly we obviously get above 50,000, and then we get back above, we'll call it 53,000, because then we find ourselves back in our old range up here, and even with this massive selling, we will find ourselves back above all this price action block that we've got going on here. That is the best case scenario. What is the more realistic bullish case is that we just basically we hold 42,000, but ideally hold above the midpoint of this, which is basically about 46,000. But obviously with this expansion of volatility, a move back down to test lows around 46,000, which is not even anywhere near the actual lows, clearly can't be off the cards, and this can definitely just look like a bit of a dead cat bounce after obviously this pullback. But yeah, like I said though, if we do get and hold above 50,000, and if we do get and hold back basically into our old range, then yeah, I think people will start to look at this as a very strong bottom, flushed out everybody that was over leveraged. Buyers that wanted to get in obviously got orders filled, and then would have bought back up, and then yeah, we can continue onwards and upwards. This is not anything that we don't see in Bitcoin bull markets, and obviously we do know it's getting catalyzed by weakness in the stock market, indecision and politicization of the Fed, and yeah, I mean, obviously markets worrying about inflation, also deflationary concerns, yield curve, bond trades that are basically absolutely hammering some hedge funds, so they're having to liquidate positions. There's basically hedge funds have been have been putting on a yield curve steepening trade, and literally the opposite is happening, which is obviously contributing to the volatility, because obviously when hedge funds have big losing positions, they have to then sell other positions and other potentially winning positions, and then they just everything is getting sold all over the place in a sort of liquidity crunch. And ultimately we know markets are driven by liquidity, and this could be very easily why some Bitcoin that these hedge funds have had that have to get liquidated to cover obviously out of control over leveraged bond positions that they are getting absolutely hammered on. But yeah, what we do want to look at though whilst we are here, first and foremost, we'll just have a glance at EBTC. Absolutely going for it. Forward check, back check, pay check. Where do we end up? Who knows? But if Bitcoin recovers, Ethereum will potentially recover quickly, recover quicker, obviously as long as Bitcoin doesn't go on a mad one. But yeah, this is obviously a healthy looking chart. We were looking at this breakout, we're looking at resolution to the upside, so that's looking good. Anyway, what I wanted to show you, back to stock market, back to the S&P. Obviously this is is a very nice pullback. We can just cast our eyes back down to this pullback, of which we eventually went on to make higher highs, and this is doesn't even look as bad as how deep this one came. I mean, it's close, but we'll just have a look, and then we are going to have a look at something else in a second. This is realistically about a 6% pullback, and what we've had this time, well, actually from that wick it's probably about the same, but yeah, just about a 5%, so it isn't quite as bad. We did obviously hover around this level a bit, not this level but these lower levels, and then ultimately made our way back out of it. But what I do want to kind of look at, if we go over firstly to the monthly, you can see we have run into it. We've run into a monthly 9, so easing off the monthly 9. We did pretty similarly into the last monthly 9. I suspect we will carry on onwards and upwards until we basically hit well, the 2.618 and what will be the third monthly 9, and then all hell will break loose. That would be my guess. But the other thing I want to kind of show you guys, I mean, here's the bi-weekly. I mean, you can see nothing untowards here. Just a continuation of the trend. This pullback is merely a blip in what's happened. What is basically just a blip in this upward price action. Obviously, at some point this will give way, and it will be the end of. Well, you're saying that it could just be a crack up boom, which we have spoke about a lot, and we could be in the process of that, and we could J-hook our way up. And also, if we look at the weekly as well, the weekly shows it even more clearly with this obviously moving average that basically is just guiding price up nicely, and nothing really untowards there at all. So yeah, obviously that famous saying, when in doubt, pull it out. You can see obviously there isn't really too much to be worried about. I do think going into next year though, I think basically the bull market will carry on into late next year. Just longer than what people expect, and then then stuff will hit the fan, and things will start to look pretty bad. If you want to look at oil as well, just because obviously that is kind of trading quite well. It basically oil is a good indicator for what the market is worrying about regarding travel and obviously global health concerns. So yeah, it is still hovering around here, but if this just turns around, that will obviously indicate that confidence is growing back in the market. We don't normally look at this, but this is quite specific to obviously like lockdowns and things, because it is clearly linked to travel and obviously fuel costs, fuel expenditures. What else do you want to look at on here? Yeah, we look at the ETH/USD just for bants, but yeah, it is looking quite good in the context of what's happened. We are back into this zone here. I mean, realistically, this was kind of the main level. Above this level, then we are basically like just targeting onwards and upwards for new highs, like we did last time. Once we broke back above here, up until obviously we had this big dump. But if we get back above here, and we're not far away from it at all. I mean, this is why you can see this chart does look quite considerably better than the Bitcoin chart, which is clearly reflected in this chart, which is just a derivative of the two. So do we want to look at the stochastics? Yeah, I mean, we can do. Obviously we do know they're pretty beaten up, but yeah, 4 hour is moving upwards. Can it get us above 50k? That would be nice, wouldn't it? 10 hour pointing down but looking to turn back up. 12 hour pointing down, looking to turn back up. Daily actually looking to turn back down here. 2 day though, turning back up from a very low level. 3 day looking to try and turn back up. 5 day pointing down. Weekly down. Bi-weekly actually looking to try and roll back over now, but monthly looking good. So I mean, it is relatively bifurcated, but if this 4, 10 and 12 hour, and then if the daily does turn back up, if you actually look at more at the 4, 10 and 12 hour, if they can get us basically back up towards well, the best back above 53,000, then I do think the market will start to build in confidence. But again, like I said, it will depend on what happens in stocks. But also we do need to watch out that we don't just print a quite a large head and shoulders here, and then ultimately break this $40,000 net line, because it wouldn't be ideal for price action, put it that way. And if we do want to look at what basically a pretty much a rough measured move of this would be, if that was to happen, not looking good. It's literally taken us down to, well, basically well below 20,000. So and that if basically we do have a change in like the second derivative, the rate of change of inflation, it is the increases are slowing. If we do basically stop, if basically we go into deflation, that is the point that this asset and lots of other risk assets will get dumped big time, and literally getting below 20,000 in that scenario is highly likely. So it is a case of what the Fed does. Is it going to raise rates 3 times next year? It's quite funny. It's quite funny saying that. No, it is not. For a start, we aren't going to get the inflation is transitory. But just not on the time scale that lots of people are looking at. Basically, like the short time frames, it isn't transit. It is transitory, obviously, on the longer term time frame. So we do have massive deflationary pressures, and they are going to alleviate. The inflationary pressures are going to alleviate due to the deflationary, overwhelming pressures that we've had for multiple decades now, and rates are not going to have to be raised, and rates can never and have never realistically been raised much anyway. We have just been in like one of those where we just get the lower bounces when the Fed tries to raise rates, because basically they can't. We live in a full-on debt-laden Ponzi system that is just becoming more and more corrupt and inefficient. So rate raises, realistically, they're off the cards. There's too much debt. It's just not going to happen. Basically, that's all we can realistically say. They tried it when we had the whole Trump pump economy. They raised it a couple of times, and then obviously basically Powell had to do his Powell pivot, his 180, and then literally just became a slave to the stock market. So yeah, that is it. I mean, ultimately I see more of a risk of obviously a crack up boom rather than a massive crash. I just see that that deflationary pressures are the ones that they are the overwhelming pressures. And that means that they're not going to realistically try and fight inflation, because they know it isn't really a problem. It will basically, the inflation fire will go out of its own accord. And we are just more likely just to see a constant rise in asset prices, a constant rise in stock markets, just as we see over time, a constant rise in property prices, a constant rise in crypto prices, and basically a constant fall in the purchasing power of your fiat fund coupons. So there we go, that is it. Obviously in the meantime though, I am talking like super cycles realistically, and we can have a deflation. We do get deflationary sort of, they are literally relatively moments in the larger time frame, and we do get severe moves down in those occasions, when that happens. So but ultimately we do know the only thing that they can do is basically inflate away the debt, inflate away the massive debt that they just basically everybody is accruing and in people's personal finances, companies and sovereign and governments as well. So yeah, there we go, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.